Hi, I'm Moti Cohen, the CEO and co-founder of End Milo, and you're watching Taking Stock right now.
Two minutes to go until the close, and the tail of the tape on this Friday, December 12th, is one with a fair bit of profit taking and a rotation out of some of the risk-on sectors that have defined the all-time highs here on Wall Street the last few days. That rotation out of tech to a bit more defensive plays. We are seeing strong performance on the day from staples, discretionary, which oftentimes don't lead at the top of the pack of the 11 sectors together, as well as healthcare. And as we said, technology shares here on this Friday selling off more than 2%, energy and industrials down as well. All this coming just one day after fresh all-time highs across several of the major market indexes, and of course 2 days after the FOMC's decision on short-term interest rates. What a jam-packed show we've got on tap. And speaking of the show, welcome to it. You're watching Taking Stock. I'm your host, JD Durkin. Mere moments away, my friends, from the ringing of the iconic closing bell here at the New York Stock Exchange, Madison Square Garden, and the world-famous Harlem Globetrotters set to do the honors here in just a moment. It does not appear as if we'll finish right at session lows, but the S&P 500, fair bit of profit taken on this day, will look like it will finish down more than a full percent. Most of the Magnificent Seven tech stocks are down. A bit of outperformance for Tesla on the day. Shares of TSLA are up 1%. We'll pick up the rest of the scorecard and talk with Peter Tuchman, the Einstein of Wall Street, right after the bell. But for now, the team from Madison Square Garden and the one and only Harlem Globetrotters set to do the honors. I gotta say, it's not the first time we've had the Harlem Globetrotters down here on the trading floor, but I love the Harlem Globetrotters. There is no close quite like when they come here to do the honors. Final tail of the tape on this Friday, December 12th. Profit taking and rotation out of tech, like we said, that's the big narrative on the day. The S&P down 1%, the Dow down 0.5%, the NYSE Composite Index down about 0.5%, and is oftentimes the case for these defensive risk-off days. The Russell 2000, the small caps, right after an all-time high yesterday, bearing the worst of that rotation. The Russell will finish down 1.5%. Let's bring in Peter Tuchman. He is the Einstein of Wall Street, the institution inside the institution of the New York Stock Exchange. Thank you for being here. As
nice.
Well, however you want to hold it,
specialty.
honestly.
That's my specialty.
You're not kidding. Broad selling across the tape, advance to declines, one advancer for every two declines. So pretty decisively negative breath on this day.
Yeah.
But after all-time highs, after a Fed meeting, what did you see in today's price action?
You know what? Look, I was curious about the way the market reacted to the Fed. Right, the initial thing, all eyes were on that meeting. It was probably the biggest anticipated Fed meeting in a while for lots of different reasons. Just because obviously what's going up against Jay Powell and the president going up against each other, a little bit of a...
All right, turn the microphone. There
That
we
helps.
go. Welcome
I
back.
don't need a microphone. Hello. Okay. So anyway, look, well anticipated meeting. Okay, the Fed meeting. Right. We had a mid-November. We had a little bit of a wild mixed signals. The spike got down to about 15% probability that we'd have a cut, and then it got up to 85% spike. Right. So Dan Ives said that the chances of us not having a cut are about the same as me playing center for the New York Knicks in the 25-26 season.
Sure.
So we knew there was going to be a cut. So the 25 base point cut is what the market needed. The market made it clear to us that's what they had to have. Okay, the first reaction, low of the day was the 2 o'clock announcement, high of the day was the closing bell. So Wednesday, whether it was a knee jerk or it was just what the market wanted, the reaction was fine. We came in on the next day, and overnight we had started to sell some stock, and people thought, okay, well now it's really not, the response wasn't a good one, now we're going to start selling it. But we opened at the low yesterday and closed at the high. So that was a show that, you know what, no, we actually like this. And look, and as you described there, look, you're going to have a lot of different, you've got tax harvesting, you've got profit taking, you've got people who are positioning themselves around the fact that they were questioning whether we would have a cut or not. Right? It was very clear to us in November that a lot of the big players had very interest rate sensitive portfolios. We saw that every time the number changed, it sold off aggressively and rallied aggressively. Today, I think it's a mixture of two things. I think it's profit taking, I think it's also tax harvesting, I also think it's response to the Oracle story. Right? The Oracle story describes that we've talked about it before. Oracle, Meta, Google, and some of the bigger players who are not in AI have over the last 6 months committed huge dollars to the data center story. Well, the news that came out today was that the data centers that Oracle was building, which they've locked in a lot of supply to specific players, is going to be delayed a couple of years. Right. Well, think about that. This is a very, look, NVIDIA's sort of monopolized the whole story. It is a limited supply of the GPUs, so when you actually have a supply that's being offered to you and you lock that in, and suddenly that is being delayed a couple of years, that definitely offers a little bit of anxiety.
Yeah, Oracle shares down 11%, pulling tech. I got 30 seconds left or so. What's on your radar for next week, the final full trading week here in 2025?
Yeah, a lot is going on. We've got an S&P rebalance, we've got a Russell rebalance. As I said, the last 2 weeks of the year, there's a part of me that I've already printed up the Dow 50,000 hats and the S&P 7,000 hats. That's what I'm hoping. I think the runway should be clear. It depends on how the narrative over the weekend is on this story about Oracle. Because if this is more than just profit taking and people start to worry and they sort of bring up that story again about why did these people take on all this debt when they didn't need to, that's going to pull the market down a little bit. You know what, net, it's been a great year.
Sure.
We're up double digits for the year. The market has told us by 48 record closes that it's going to be a good year, net, no matter what happens in the next 2 weeks.
We'll see.
Santa Claus is coming to town.
All right, there you go. Santa Claus is coming to town. The Santa Claus rally officially kicks off Christmas Eve, goes until the second trading day of January. Who better to kick off the broadcast with the Harlem Globetrotters than the great Einstein of Wall Street? My man, thank you for being here.
Thank you, Chief.
Enjoy your weekend.
Always
Josh will grab your microphone.
Thanks,
Jeff, Mateo, you and I are going to head for a walk this way. We will now bring you the latest Poly Market odds with a very closely watched event contract we've been giving you periodic updates to as Poly Market participants are trying to figure out what will be, by market cap, the largest company in the world by the end of 2025. The lion's share of wagers there are predicting that it will be NVIDIA, which has 87% odds, Apple at 13% odds, and the team from Alphabet at 1%. A few other mega caps there as well. Microsoft, Tesla, Saudi Aramco down less than 1%. Current market cap for NVIDIA is 4.3 trillion. Apple just below it at 4.1 with a couple weeks left between now and the end of the year. Jeff, finally, we'll take a look at two NYSE notables here on the day. How about one of the best performers in the S&P 500 today? These both are going to make me hungry. Chipotle shares up 3.6 on the day, finally reclaiming that 50-day moving average, but it's been a tough couple of months here. Fell 20% for the October quarter after a miss on revenue. The company opened up its 4,000th location this week and just announced it will open more than 370 in 2026. Finally, shares of Shake Shack also having a strong day, up just about 5%, announcing this week to investors very ambitious growth plans to boost its market share, as well as loyalty programs as an effort to entice younger customers who are into loyalty programs. Shake Shack shares, that's fun to say, down 34% from the start of the year, but up 6% week to date. In our continuing coverage of Solana, Breakpoint, and Abu Dhabi, FinTech TV's very own Rachel Pether spoke with Jason Dominique of OnChain all about the state of on-chain payments. Take a look.
Hi everyone, we're here at Solana Breakpoint in Abu Dhabi, the first time that it has been held in the Middle East. Super excited to be here, and I'm joined today by Jason Dominique. He is the CEO and co-founder of OnChain. Jason, thanks for joining us.
Well, thanks for having me. Really excited to be here.
So I know it's a big week coming up for you. Before we get into some of the specifics, let's start with the bigger picture. What are some of the problems you're trying to solve?
Yeah, well, I mean, going straight into it, we're all really excited about this potential of the on-chain economy, but most people that want to go and, transact on-chain beyond stable coins, because obviously that part is almost pretty figured out. But all of these assets that live, directly on these ecosystems like Base or Solana or BNB Chain, they're very hard to get to because there's many steps involved. One of them being like having to acquire gas. Most people will be like, well, gas is something I put in my car. Beyond that, you have to, give me the 101 on what is gas. But long story short, when people want to interact on-chain and do their first swap, to participate in this on-chain economy, 3 out of 4 of them just don't make it there because it's just too hard, too many steps.
And so this on-chain world is obviously ginormous. It's a very large market. What are some of the controls that you can put in place like upon entering, obviously you don't want to be able to buy just anything. And
Yeah, exactly. So what we say is that, access but not reckless. So right now we live kind of in a spectrum. We live in a either very centralized and controlled environment, which are these exchanges. And then you have all the way on the other side of the spectrum, we have decentralized finance with the exchanges that live over there, Uniswap, Radium, etc. And unfortunately, the way the foot that they stand on is a foot where they can't really be biased or decide what could and cannot be bought because they have to remain decentralized. So we're finding ourselves with kind of this massive gap where there's nothing in between that's balanced from from a safety and verified perspective. So that's where we kind of came in. We wanted to increase the access, but we didn't want it to be reckless. So we put together something that we call smart guardrails. These are predetermined kind of areas that we check with the asset themselves that are living on chain. Some of them are contract based. Is there any honeypot risk or minting functions that could kind of drown the supply of the token and affect the price? There's some elements that we're checking. Is there enough liquidity for it to be traded safely without any too much price impact? But fundamentally here, I think what matters is from an access perspective is whenever someone wants to, participate or own one of these assets, they can just come to our website and they can list it on demand without having to ask any permission. And when this request is being done, basically this is when the smart guardrails operate. They operate in real time every single time that a request is being made, so that we know if things are changing. It's not because we've enabled access 2 weeks ago or 5 months ago that access can be granted or permitted today.
Amazing. Well, thanks so much for your time, Jason. Personally, I just think that friction is such a big part of why we haven't had true convergence yet. So I think it's great what you're doing in the space.
Thank you.
Thanks so much for coming on.
Welcome back to Taking Stock live from the trading floor of the New York Stock Exchange. All right, it really does not get cooler than this. Say hello to the Harlem Globetrotters, including Keith Dawkins. He is president of the Harlem Globetrotters and Hershen Entertainment Studios, with the one and only Splash from the Globetrotters themselves. Thank you both for being here.
Thanks
really
for
great to
having
have
us.
you.
This is fantastic.
So 100 years.
100 years.
What a legacy behind this incredible entertainment product. What does this mean to you to not only be here for the New York Stock Exchange, but to have such an incredible milestone?
Well, I was saying to someone earlier, I feel like it's like history in history, right? It's like the world famous Harlem Globetrotters. We're playing at the mecca of the world's most famous arena, but here we are, like the financial capital of the world, right? Where the markets are made, and that's pretty spectacular and pretty awesome. So it means everything to us. 100 years of excellence, 100 years of joy and possibilities of hope. We'll have our entire Globetrotter roster out there. These fantastic new uniforms they're in by celebrated designer Jeff Hamilton made these for us. So it's really an exciting experience.
Wait, can you talk to me about the design of the uniforms that Splash got right now?
Yeah, so we brought the red, white.
100-year brand.
Listen, let's turn around for a little bit. So we brought the red, white, and blue back. We had been out of the red, white, and blue for a few years. New logo, right? 100 years, the 5 stars, the original 5 Globetrotters, the Savoy 5, when Abe Saperstein founded the group back in 1926.
Wow.
World famous, kind of a nod to, that's what we call ourselves, right? We could travel some 250 tour dates around North America, another 150 tour dates around the rest of planet Earth, right? So, and the red, white, and blue, the stars and stripes, right? I always say to people, if I was the President of the United States, which I wouldn't want to be, my Secretary of State would be the Harlem Globetrotters, because everywhere they show up, people just love them. It's fantastic.
I have a sneaking suspicion you probably like the job you're doing now a little
Yeah,
bit more than you would be for
1000%.
president. But what a great partner for MSG. You got the world famous Harlem Globetrotters at the world's most famous arena. What does that partnership look like?
It's been great. We were able to get back to the Garden about 3 years ago.
Wow.
And we had an eye towards, we wanted to kick this thing off really in a spectacular way for the 100-year anniversary with them. Listen, they've had some of the most iconic events happen there, right? Ali Frazier 1 was there, right? The fight of the century. Billy Joel residency and a variety of other things have been there. And so we really take pride. We love all of our venue partners. We love all of our venue partners because they're important to us everywhere we play around the globe. But it's special to be in the Garden, right? And we have a lot of players who are from the New York area, so they're excited about that.
Can you talk to me a bit about inclusion and some of the ways that you and the operation, you continue to break barriers 100 years later? What does that look like? And constantly having those conversations as an operation.
So what's interesting, and that's an important thing for us. I'm glad you asked it, because a lot of people think that, like, oh, it's Steph Curry and Kyrie Irving who are able to do these. I'm like, That wasn't seen in basketball ever. The Globetrotters started that. That blend of sports and entertainment right now, that is, when you think about these financial markets, right? It's like the college football playoffs, and that's a $2 billion franchise in terms of that idea, right? And NIL and all those things. That sports as entertainment, the globalization of the sport, merchandise and licensing being a thing that people want to attach themselves to, the first woman being signed to a professional men's team long before the WNBA, right, which expanded the base and the footprint. In a simpler world then, right, but showing up in a multitude of ways, a live tour, a television product, consumer products, all those things, that all started with the Globetrotters.
Talk to me a little bit more about the 2026 Global Tour, what people can expect, and some of the places that you and the players are most excited to visit.
Listen, we'll be 250 tour dates around North America, so literally everywhere about North America. Across the rest of the globe, you're talking Australia, New Zealand, all throughout Asia, northern part of Africa, all throughout Europe, so there's no place that we don't cover. We're really excited about that. We got these new uniforms we brought out. We have a variety of new partners on the collectibles front, trading cards, lottery programs we're doing, a whole assortment of things, retail programs we're doing, Walmart, Target, and others, gaming programs, NBA 2K. I mean, it's just a long list of partners.
That's
and we're
amazing.
just super excited. And new talent that we brought on board this year. So it's
there
really
we
great.
go. Well, congratulations to both of you guys. Thanks a lot for being here. I got to say, I've been a huge fan of the brand since I was a kid.
Awesome.
My mom used to take me at the old Meadowlands Arena to see. I went to a basketball camp with the great
Meadowlands,
Curly
that's
Neal
great.
back in the day. He
Yeah.
ran a basketball camp
Right.
for us. It got me so hyped on the brand. Congratulations
You were
on
a center?
everything. Thanks a lot. Oh, yeah, for sure. You can tell, right? Yeah. My 5'11" stature, a 5'11" on a good day.
Right.
Thank you, gentlemen.
Thanks,
Good to
brother.
have both of you
Thank
guys.
you.
Thanks a lot,
Thank you.
Splash. What a pleasure. Folks, don't go anywhere. Much more Taking Stock coming up from the New York Stock Exchange right after this. Welcome back to the show. You're watching Taking Stock live from the trading floor of the New York Stock Exchange. We now head back to Solana Breakpoint in Abu Dhabi. That's where FinTech TV's very own Rachel Pether sat down with Tarun Chitra of Gauntlet for a one-on-one interview you do not want to miss. Take a look.
Hi everyone, we're here at Solana Breakpoint. This is Rachel with FinTech TV, Solana Breakpoint here in Abu Dhabi. I am joined today by Tarun Chitra, who's the CEO of Gauntlet. Tarun, thanks so much.
Hey, excited to be here.
So-
New venue for you guys.
Yeah, exactly. A little bit of a refurbishment, let's say. So tell me a little bit more about Gauntlet and what it is that you're focused on.
Yeah, so Gauntlet has two main businesses. One is sort of services business, consulting business, and the other is on-chain asset management. So we have a little under $2 billion of assets under management. We have a lot of assets on Solana. That's one of our fastest growing chains. And we just announced, realistically, our partner announced a big product that we're kind of powering the backend for, which is the Squads Altitude neobank wallet. But we're really just excited to be here, meet all the fintechs who are dabbling in crypto. I think if you go to Solana conferences or Ethereum conferences, you just get a totally different spectrum of fintech and neobank customers. And for us, we're just trying to help them come on chain, find yield, and that's safe, and be able to offer that to their customers.
And so where are you seeing most of the growth coming from your side at the moment on the customer side?
Yeah, so a lot of our partnerships are we work with neobanks, fintechs, some small banks in other countries, like fully regulated institutions, who want to offer their users crypto yield, but safe crypto yield. And we basically go and find safe crypto yield, put it together so that you open your fintech app, you put in $100, and you can watch your money grow.
What do you think is still some of the friction points for investors that are on the sidelines when it comes to yield? Like, is it that they don't understand the safety that's involved in it, or how do you
Yeah.
bridge that gap?
Yeah, for sure. So we've been around for 7 years, which in crypto years is like
A
70
lifetime.
years.
Yeah,
Yeah, it's but we started actually our consulting business and risk management business is we basically audit people's setups and then measure their risk management, sort of assess them in different ways. And then we also do sort of live risk management where we monitor. So we spent 5 or 6 years building out these tools before we went to actually managing assets. So for us, we kind of have played the slow game over time. I would say the most important thing is that right now what you're seeing is people who have stablecoins are just more comfortable from a regulatory standpoint with certain types of low risk crypto yield. The low risk crypto yield is people who are in crypto who want to borrow stablecoins. So they have some crypto asset, maybe they have a bunch of Solana, and they want to borrow stablecoins to buy a house. They want to borrow stablecoins to go leverage long Solana. And we help match borrowers and lenders and find interest rates that make sense for people. And then that goes to our depositors.
Yeah, it feels like that collateral management piece has become a bit of a game changer for people that want to come into the space in terms of what they can do with their crypto now.
Yeah, definitely. I think that's the idea is that a neobank, they focus on getting users, getting customers, building the best UX. We do the collateral management, the risk management. We do all the matching, kind of assessing the borrowers, stuff like that, in real time. And we're bidding on loans all day, and so we kind of hide that complexity for our customers, for banks.
So anyway, thank you so much for coming on today.
Yeah.
It's been a pleasure as always, and look forward to seeing you again soon.
Excited to hear it. Thanks so much.
Thanks so much, Darren.
Yeah.
Welcome back to the show. You're watching Taking Stock. We continue on with our ongoing coverage of Abu Dhabi Finance Week and Solana Breakpoint in Abu Dhabi. That's where FinTech TV's very own Rachel Pether sat down with Jack Collier of IONET. Take a look.
Hi everyone, it's Rachel Pether for FinTech TV and we are live at Solana Breakpoint here in Abu Dhabi. I am joined by Jack Collier, who's the Chief Growth Officer of IO.net. Jack, thanks so much for coming on the show today.
Thanks for having me.
So let's start with some overarching basics. What is IO.net? Tell me more.
So IO.net, it's a Solana-based decentralized GPU net marketplace. And what we do is we essentially get GPU providers from all over the spectrum, whether that's just somebody, with a 4090 or a GPU chip at home, running a server at home, all the way through to large data centers. We kind of pull that supply and we serve that to customers. And so what that means is we're able to offer a diverse set of GPUs at on demand. So people can come in and flexibly spin up a cluster, spin down a cluster. We offer for cheaper pricing than, say, compared to AWS and Azure and GCP. And we can do that in a way that is in keeping with all the crypto values. Like, it's transparent, it's fair, and it's sort of a new way of being able for people to get access to GPUs without paying the big price tag.
Incredible. And you've also had some big announcements recently. Can you talk us through those as well?
Yes, of course. So we use a blockchain, obviously, to support the whole network. So an example being every time someone purchases a GPU or rents a GPU on our network, all of that record is kept on chain. So you're able to see the amount of revenue that goes through the chain. You're able to see what type of devices they're buying, what the uptime and things are like in relation to those devices. And the way we encourage suppliers when we first launched the project back in July was we did a supplier-based incentive program with our tokenomics. So there are emissions that come from that token, and we use those emissions to incentivize people to come and join. So great, every DePIN basically in existence has done this to sort of bootstrap their network. So it's encouraging lots of suppliers to come and join. Now, there gets to a point where that actually is no longer a sustainable model for a DePIN network, because as price goes up, the token goes up, the suppliers are getting a lot of value out of the network, and as the price goes down, obviously the value that they're getting goes down, and so they're not protected by the economic shocks of the token itself. And obviously, with it being an inflationary system, we're constantly giving out rewards for supply. It's not really sustainable in the long term. So what we've done yesterday was we launched the IDE, which is the incentive dynamic engine of how we treat tokenomics. And what that does is it flips it on its head. It goes from a supplier incentive to a demand incentive. So as we sell GPUs, then we emit to be able to reward suppliers for the participation in the network. And we've made a few other changes, such as we denominate the rewards in USD. So we still give IO token as a reward, but that's in USD. And what's quite novel is we've also created what we call a vault structure. So as the price of the IO token goes up or down, we keep a reserve within those vaults that we can use to basically make up any rewards, any reward difference or incentive difference, to be able to ensure that a supplier gets a consistent payout for their device. And so what that means is it's still encouraging suppliers to come and join, because we're able to sell. We're at the point now where we're selling a lot of our demand to Web 2, Web 3 clients. We have over $20 million in revenue already on the platform, and it means that they're going to be able to predict the amount of rewards that they get at the end of the day. So it's good for suppliers, it's good for the network, and I guess the last thing I would say is within those vaults, we're also able to decide to burn tokens should we wish. So if the size of that vault gets too big, we can just burn a lot of that supply, which will reduce the inflationary pressure on the network that I mentioned earlier, which is just a great, more self-sustaining way of running the token, as opposed to relying on an endless supply of sort of inflationary tokens.
Hello and goodbye. A very special thanks to the Harlem Globetrotters for being on the show. Have a great weekend, one and all. We will see you again on Monday. Woo!